Hey, it's Mike with PriceActionTradingSystem.com, and it is Monday, September 23rd. This will be our chart lesson for the day, and you can see that it looks like we had an up day here. I guess we did to some degree. It was a range day, really, is what it was, but we did close on the highs today. So I don't know if we actually did we actually close higher. 57, 76, 75. So yeah, we did close higher today. It doesn't look like it there by much, but wait, actually I might have looked at the high. Close 74.75, close 62. So yeah, we still closed slightly higher, not by much, but we did close out. We traded a good bit higher, but we only closed slightly higher from Friday's close. So, but we continue to uh, push higher. Or attempt to push higher here. We're not we're not backing off yet. I still think we're going to. I mean, we could be trying to make a measured move here based on this first leg down here. So that'll be interesting to see, but that's a possibility. Now remember, we do have the break here of this green channel and two legs up, and we've got a new all-time high here. It's not by much, so it wouldn't surprise me if we continue to push higher here. And again, I still think they're going to keep this market propped up through the election. So at the very least, I don't think we're going to see any big sell-offs or anything. We could see a correction, but I just don't think it'll last very long if we do. Um, I think they're going to keep this thing pushing forward. So anyway, let's flip over to the 2,000 tick chart, take a look at it, and go through the trades, and we'll wrap this day up. Okay, here's a look at our chart. You can see the overnight highs and lows. Um, and we traded outside that slightly this morning to the high side. Didn't last long. We shot right, just a quick failure. We tested a few more times, but could never push through. Sold off, bounced at the midline, and ended up closing fairly close to the highs there. You can see it. It's just a range day, just mixed trading. These days can be sometimes hard, sometimes easy. It depends if they turn consistently. We had a little bit of consistency here. We at least had some trends that you could try to trade as well. There's not a ton of great trades here, but there's a few. Um, there were a couple early on here. There was a news item here at 8:45. You had manufacturing PMI. Um, So you wanted to block that out from about 8:40. It didn't really make much difference. So really by not long, by 9 o'clock at least, well before 9 o'clock, you could really start trading again. So um, anyway, 7 o'clock came is right in here as we're kind of pushing up higher here and starting to turn over. Um, you didn't really, I didn't really see anything here that I was willing to trade. This is one you might consider as a green because you could call it a failed break higher because of all that resistance right there. I'd want to wait on a lower high, which comes here. And I mean, that's so, I mean, it closes on the lower, and the lower portion. Is it the lower 1/3? It's close. Um, Maybe you trade that. I didn't like either one of them in real time, honestly. Um, but you could mark either one of those green. If I was gonna lean to taking one of these as a green, it'd probably be this one, the lower high. And you can see it got a decent move back down to the lows. Then we got a triple test. This is an engulfing bar. You got to wait for it to close. You can't use this bar. It's too neutral. So if you want to go long there, I like that one. Um, this is it's a small bar, and it's right back similar to where the high is. It's not quite that high yet, so you don't really have a consistency there to take that on a first entry with that being inside that channel. So I skipped that one. We came back down and you get another test of the lows. It holds, and you do get a close outside and a new low on the same bar. So I liked going long there. For a minute there, I thought that was going to be a loser, but it does back up. But it ends up pushing higher and turns out to be a decent trade. And then, of course, you had to be flat for the news here. And then this one was tempting. I don't think you could trade it on the engulfing bar. And this bar is 21 ticks, so it's a little large. I mean, otherwise, that would be a trade you'd want to take. But, you know, I'm just not crazy about it. It easily gets 2.5 points there. So, I mean, if you took that, I mean, wouldn't be the end of the world. What you might do is let it break lower and drop a limit order back in there. And you can see you could have gotten filled all the way back to maybe halfway back in that bar. So that price, at least right there, you could have gotten filled. I'm not sure what that price is right there. It's about where this one closed. So 72.25 versus going short at 70, or actually be 69.75. So saves a little bit, a few ticks there. So, but that's a possibility. I didn't like anything else here. This one was tempting too, but we didn't quite get a new high, and you see we did push up and get one here. So now you've got to break and move to a new high, and so maybe you go short there. If you didn't go short there, you're always better to wait on this lower high. So if you didn't go short there, you could here. Did this one close in the lower 1/3? Oh, it's close, but it is a lower high. Odds are, as long as you got room to kind of get back here to the EMA, I mean, you usually don't worry too much about the EMA on a range, but here your concern would be if you hit that and bounced and continued going higher. So as long as you got room back to that EMA, I'd say take it, and you know, room back to even this upper band might be something you consider as well. But with this being a lower high, and this, as long as that range has been in play there, I think you're good to go short right there. And then it finally breaks out again, goes higher. You get a tight channel working up, close outside new high, and that's a second entry. And you got the break at new high. Like I said, normally on a breakout you want to kind of wait on a lower high, but we didn't have a whole lot of anything up here to really say that was going to be the highs of the day. So most of your resistance had been way down here. So being that far away from the EMA on a second entry, I like taking that trade. And you can see it turns out to be a nice move down. And in the end, I might have this wrong here. It might have been just one and then a break and a couple of legs down to a new low, and then it reverses. So I could have that wrong, and you could treat this like a second entry, but this is an inside bar, so I still don't like taking it. But there's a double top right here, so that would be a first entry, second entry. So that's like 2 legs down. But then you get another runner back up, close outside, move to a new high. Then you even get a lower high here, but there's no signal bars on either one of those. And then now you're running lower on this tight channel. You get a breakout, a close outside the trend line, move to a new low, and a second entry long with a nice bullish bar way away from the EMA again. So I like that one. And again, you're on these trades, you're just here. Your hope is just to go back a minimum to the EMA and see what happens. It may turn down there again because we may trend down to the midline or the other side. And the other thing to take note of was we opened right here today. The yellow line is the opening, and so if that yellow line is above or below this red line, then you've got a gap on the chart. So prices might have been trying to go lower to attempt to fill that gap. They never did. They got really close, but they never filled it. Never failed. Somebody asked me about that, and I talk about it, occasionally. I know I've talked about it in the last couple of weeks, so make sure you pay attention to that. When I'm talking about the gap on, if you hear me talk about a gap on the chart, the daily chart or whatever, that's what I'm talking about. Because if you just look, and what basically what we're doing here is we trade a 24-hour chart. We look at it and take all that into account. But technically, at 8:30 when the regular session opens, none of this is in here in this part back to where it closed yesterday. This red line is and that would be Friday today actually, because this is the last trading day was Friday. So last night at 5 o'clock or Sunday night at 5 o'clock, the market opened right here. And actually, where did it open? Yeah, it opened right here. Traded down a little bit and then turned up. But that's where it closed. So there's not much difference from where it opened and closed on Friday. But if we weren't trading a 24-hour chart, all this gray part back to this line would not be here, and prices would have opened up here, and you wouldn't see all that stuff in there. So it would be like we opened right here, and here's where we closed Friday. So there's a gap there, and prices usually try to fill that gap. So I hope that's clear. I don't know any other way to make that any clearer, so hopefully it makes sense. But I think we were talking about this trade, 2 legs down, second entry long. No higher or low or anything there, and then we're trending up again. And then, of course, we find resistance up here again. This is all just too. It's tempting to go short right there, but look at all that support across there, and you see what happens. Is there enough there that it would have worked? I still wouldn't take it, but let's just see if it would have worked. Nope, it'd been a 4-tick failure there. So that's why you don't go short into, in congestion in with a real tight support like that, and then it actually breaks out and turns down again right off these highs up here with a relatively small bar, 5 ticks. I marked this green, but technically you could almost make that red. There's plenty of room to get out, and that's why you have to have room to get out, because notice where it bounced right there, and then it would have stopped you out. If you didn't have enough room, you'd have got stopped out. So this is a great example of why I'm always saying make sure you got room to scalp out from where you enter to where the lows are. And that's a great example because it bounced right there and went higher. So you'd have got stopped out if you didn't have room to scalp out right there. So that's the purpose of that rule of making sure you got room to scalp out. And that's all you would have got out of that is a scalp, no setup here, and then we drop down. The reason I marked this one green is clearly a first entry, second entry, right off a key entry point, and it really kind of confirms that key entry point. I made it green because it looks a little congested here. So, I mean, that was a pretty strong move down. So with another second entry, we're probably going to get another leg similar to that at a minimum. And you can see we went much further than that actually. And then you get a close outside, first entry, and then I think you get a slightly higher high here. Let me just make sure that before I tell you that, 72.75. No, it's a double top. And that's probably, I think that's why I made it green and not red, because it didn't quite make a new high there. It is a second entry. I mean, this is real close to being red. I'd probably take that trade regardless. Then we got a triple test here with the signal bar. This would be your signal bar because it makes the highest point in that swing up right there. This one has a lower, so I wouldn't take that trade. And we just continue to chop down to a new low, and then we make a higher low right here, and way away from the MA. I like just trying to ride that back on a higher low. And that would be a second entry. No, I'm sorry, it wouldn't be a second entry because second entry triggered there, so that would be a third entry. So you're just trading that as it's a higher low, triple test, several different things there. We drop down again. Again, this is a higher low, but you got to go long right into that high. And you see it looks like it's going to fail. But it comes back again and confirms that trend line and gives you a failed second entry. And this is where you'd be looking for a reversal down here. So you could treat this like a failure and a reversal. It's good for a scalp. And then you come up here and you get a triple test. I like that short just because it's a triple test. There's plenty of room back to the trend line, even if we're going to go higher. We were in an uptrend though here, and just had a reversal, so that's why I marked it green. But it's a triple test, and so maybe you take that trade. It would have worked. Of course, it does still bounce at the trend line and work higher. I think this is an overshoot personally. It's hard to tell. I mean, it kind of fits either way. Maybe it's not an overshoot. I'm not sure. Didn't matter. We got a close outside there. It's not very convincing though. And we continue to work higher. These were all first entries. And this is not a super strong trend, so I'm just not crazy about entering on any of those. We do go into a flat range here. And by the time you got here, you get a triple test. Normally, I wouldn't mark that because it's an inside bar, but we're really trading range rules. And this is really, I think you can count that as a higher low that closes inside, that tried to go lower 3 times. We tried to go lower multiple times. We tried 3 bars in a row. So I tend to like that just to go long. I mean, if it broke above this one, I'd have gone long there, but it doesn't. So, and again, usually I don't like inside bars, but we're playing range rules here. And this is just a chance to get long at the low end of the range where we bounced multiple times. I think the odds are on your side there. This would be based on your read. If you trusted your read here and you felt like we're going higher, and you're just getting long at the low of the range, you could take that trade. And then we run up, and this really just takes us into 230. And that was it for the day. We just kind of chopped. Wasn't even much volume after that. Very low volume. So there it is. Mostly just sideways mixed trading today. Quite a few trades, a lot of green ones, but there's enough blue or red in there that you can find you a trade today. Should be able to anyway. So, but there it is. I don't see. I mean, it's just a sideways, congested kind of mixed trading type day. I don't see much. You have to trade this pretty much as a range, although there are a few trends in here that are consistent enough to trade. So, but a lot of this was just trading range rules today. The majority of it was actually. So, anyway, I think I'm going to wrap it up on that. Again, several people have asked me, have commented to me that I don't talk about our second entry indicator enough. If you're struggling finding the second entries, we do have an indicator that helps you. So it's available on our site. It's reasonably priced, $100. And again, I always like to clarify this. It's a tool. It's like a crutch to help you. Like if you hurt your leg, you get on a crutch. You don't stay on that crutch forever. It's not something you want to walk on for the rest of your life. You hope that you only use it for a crutch until you get that leg healed or that foot healed or ankle or whatever's bothering you, and then you get off that crutch and you start walking and running again. Well, my thought process is that indicator is just a crutch, a temporary crutch to help you learn to spot second entries, to see what they look like, to find them, and then eventually you want to wean yourself off of it and learn to walk and run on your own. In other words, you want to be able to spot and see the second entries with your own naked eye. That should be your goal. So, but anyway, several people have talked to me about how much that indicator helped them to learn to see them, and they didn't understand why I didn't talk about them more. But I usually don't hawk my wares on here. I don't try to sell you anything. That's not the purpose of these videos. Anybody that wants to watch them that can learn from them, they're welcome to. I don't necessarily teach the strategy here. The idea behind what I do here is to help people that are already learning our strategy and studying it to have something to compare their work to see if make sure they're learning to see it exactly how I see it and teach it. So that's the purpose of this. It's not to teach it, although you can probably learn it by going back and watching these videos. So I mean, they're very good to study and listen to me describe the trades. But the key is we're not pattern traders. Make sure you understand that we are not pattern traders. We are chart readers. And you can take the same exact pattern and find it over here on this part of the chart and see another one that looks exactly the same over here, but the context of the chart is different. And even though that pattern, you could lay them on top of each other and they look exactly the same, you would treat them totally different because the context of the chart is different. So make sure you understand that. The whole idea is to learn to read the chart, and then by learning to read the chart, we know where prices are coming and going to, and we know where to expect to see them turn, where to see correct back to, and then reverse back with a trend, or where they're going to turn on a range day. We know that the best entries are going to turn down up from up here and turn up from down here somewhere. And so we look to find those entries we look for these patterns to set up where we're expecting a trade. So we're not following the patterns and waiting on the pattern to show up. We're looking for the spots and then waiting for the pattern to show up at that spot. So I hope that's clear. We are chart readers. We are not pattern traders. You can't make a living trading patterns long term. You have to take every trade, and you're going to have a bunch of losers. But by being able to read the chart, we can weed out the losers and find more winners. And you'd be surprised how good at that you can get, because you can really start to understand price movements and price action. And that's what we're teaching here. That's what our strategy teaches. It teaches you how to read this chart, the rules that we use to understand price movements, because price movements do not move based on common sense. If you're a very smart person with good common sense, that served you well in your life, and you've kind of beaten that into your system to rely on it. But if you get in here on the trading chart and you start relying on your common sense, you'll lose your shirt, because prices don't move based on common sense. So we give you a set of rules to help you know how prices move. But a lot of it's just based on getting experience. You can learn the strategy and the rules and all that and be pretty proficient at that part of it, and sometimes even 6 months to a year. But the key is the amount of experience you need after that. So anyway, I'm going to wrap this up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.